In this video, I want to talk about the 6 most compelling reasons that short sellers have brought up about SoFi stock. Now, I'm a shareholder of SoFi, and in no way are any of these points big enough for me to want to sell my stock, but they are kind of compelling, and it's always good to look at the pros and the cons of the stocks that you're holding. And without further ado, let's just jump right into the list, starting with number 1, and it's actually the most recent catalyst, and that's the fact that Biden actually pushed the student debt relief plan for another 90 days all the way to May 1st. It was originally February 1st, and everyone was excited because, even SoFi was pushing it out saying, here, go on our website, refinance, get ready for February 1st. But now with this new 90-day extension, it could mean that there's another quarter without that sort of student loan debt being as high as we want it to be. Secondly, it's the fact that the Federal Reserve is talking about doing 3 interest rate hikes in the matter of 2022. And interest rate hikes actually make up for a large part of these lists, but the first one being that their actual home loans might suffer because they've been giving out a lot of variable rate mortgages, and now those people might not be able to afford those home loans as it gets into higher and higher interest rates. Now, to the extent of how much we're actually going to be raising these interest rates and how much that's actually going to affect SoFi, borrowers, we don't exactly know, but it does lead to a bit of uncertainty, and the stock market does not like uncertainty. Another big problem with interest rates is just the fact that it could actually change the actual valuations that people see in their stocks. So although we're used to these fintech companies actually holding up a certain valuation, if interest rate comes in and investors no longer see that sort of really high growth potential, it can pull back these stocks a lot. We've already seen that in the past couple months as we dropped from, $24 a share all the way down to today where it's sitting around $15. But you have to understand that whenever there's an interest rate hike, it's literally to try to slow down economic recovery, right? They think that we're growing too fast, and so they want to slow us down because there's only a certain amount of inflation that's actually healthy. But not only could this lower SoFi stock, right, in its valuations, but it could also lower the overall stock market in general. And this is where it actually goes back into actually hurting not only SoFi stock, but then its actual trading platform, because retail investors might lose interest in the stock market. You see companies like SoFi and Robinhood and a lot of these other small fintech companies taking off because of large retail investor interest. If retail investors don't find, the next GameStop, the next AMC, the next fun thing to invest in, then SoFi stock could actually get hurt because there's not as many people wanting to sign up for their financial services. In the short term, that could affect their revenues or even their growth rates. But if we start to see a slowdown in growth rates, that could, completely change the valuation of the company. And although we're continuing to grow, if we're growing at a slower pace, that could change the whole, PE ratio of the company and actually really just bring down the stock, even though we've had a good quarter. And then for our 5th point, obviously, it's the insider selling. Now, the problem with what happened with SoFi was a little bit different than other companies, because obviously everyone sells a company at some point, and it might not even because they don't like SoFi, it's just because they're reallocating capital and they have some other investment that they might want to go to. But there were some people selling SoFi, like Silver Lake, for example, that no one even bats an eye at. But the problem is that SoftBank and Social Capital are such big names, and because of the popularity of the companies that actually sold SoFi, it made it such a big deal compared to what it actually was. And then for number 6, it's just the fact that, the fintech space is a massively overcrowded space. And now I wouldn't say that every single one does it the way that SoFi does. And it's why I love them so much. It's because they're a real jack of all trades. But if you look at the amount of players that, are creating trading softwares and are creating these new automated loans and everything, there are hundreds, if not thousands of these companies now that have just sprung out within the last couple of years. It's another reason why, companies that have blazed a trail like PayPal are starting to get their butt kicked in the stock market now, because everyone does what they do now. Now, 100%, I do not believe that, it's that overcrowded that you can't make, a ton of money in this space, because obviously there's still huge banks to disrupt, but I'm just playing devil's advocate here. Anyways, guys, so that's the 6-point list. I just think that the upside for this company way outperforms the downsides here. There's only like 6 downsides that I could actually say I could put a pin to that were actually, realistic, versus, the 32 different reasons for why I'm buying the company. If you haven't seen that video already, make sure you check it out here or down in the description down below to see my bull case. Anyways, guys, really appreciate it. If you could, give me a like and subscribe down below if you want to see more financial content just like this. But until next time, stay safe trading, and I'll see you guys on the next one. Bye for now.